Why is India Inc. suddenly looking stronger than it has in years? 15% profit growth, a 20,000 crore rupee order book, 90,000 crore rupees saved at a national level. These aren't just good headlines, they are signals. For the first time in a long time, corporate India isn't just growing fast, it's growing safely. And that changes everything. Globally, capital is chasing the future. Billions are pouring into speculative bets, artificial intelligence, deep tech, long-dated promises. Databricks raising $4 billion at a $134 billion valuation is one example. Indian companies are doing something very different. They are monetizing demand that already exists, not hype, not hope, but execution. And that brings us to a simple but important question. What exactly is India Inc.? India Inc. is the former corporate economy. Listed companies, large manufacturers, organized retailers. For years, the rule book was clear. Grow fast and deal with the consequences later. The result was predictable, high debt, thin margins, and very little room for error. Today's India Inc. looks different. This is a corporate sector that has repaired its balance sheet, stabilized cash flows, and built growth that doesn't collapse at the first sign of stress. And for the first time in 4 quarters, the numbers are moving together. Corporate net profits are up 15% year on year. Operating margins have stabilized around 18 to 19%. Even as cost pressures persist, interest costs are easing as companies use surplus cash to pay down old borrowings. This isn't a one-quarter spike. It's balance sheet repair finally showing up in earnings. Nowhere is this more visible than in infrastructure, the bones of the economy. Siemens India is sitting on an order book close to 20,000 crore rupees, roughly 1.2 times its annual revenue. That means clear visibility across railways, power transmission, and industrial automation. Hindustan Construction Company tells an equally important story. Its debt has fallen by more than 2,600 crore rupees, from over 4,000 crore to around 1,600 crore. Its order backlog is now 8 times annual revenue. But growth only lasts if demand holds. And in India, demand itself is changing. Consumption is becoming more organized, more formal, more traceable. Kalyan Jewellers has reported 42% revenue growth. Organized jewelry, once a quarter of the market a decade ago, now counts for more than a third. This is formalization in real life, visible at billing counters, not just in policy documents. Even smaller, less glamorous sectors are scaling up. In e-waste, Atiro is investing 150 crore rupees, betting on an industry growing at nearly 30% annually. Consumption isn't just growing, it's upgrading. And beneath all of this sits a quite constant policy delivery. India's ethanol blending program has already saved close to 90,000 crore rupees in foreign exchange by cutting oil imports. Despite debates over food security and water usage, the outcome is hard to ignore. India has achieved 20% ethanol blending years ahead of schedule, moving from just 1.5% in 2014 to 20% today. This supports farmers, reduces import dependence, and cushions fuel prices. No noise, no drama, just policy doing its job quietly. Now step back and look at the pattern and what the numbers are really saying. Double-digit profit growth, falling debt, large visible order books, more organized consumption, silent but effective policy support. This isn't a luck cycle, it's a repaired system. India Inc. hasn't just learned how to grow, it has learned how to absorb shocks. Risks haven't disappeared. Global slowdowns, elections, commodity swings still matter. But for the first time in years, corporate India has the balance sheet strength to withstand them. This is a change in DNA. The real story here isn't growth, it's durability. India Inc. has quietly shifted from leverage-led expansion to balance sheet-led growth. So the real question is not whether India Inc. is growing, it's whether we are recognizing how fundamentally its growth model is changing. Tell me what you think in the comments. This is Indu Tyagi and you're watching WantStats. Don't forget to like, share and subscribe. Stay tuned to WantStats for the news that matters.